in the long-term scheme of things, maybe the liquidity stalled out a bit and we get a reset and stuff sells off and they have to rejuice it again. And that is the history of, when you study historical markets like Germany, that happened many times. Like,
John Law in Germany and all
the
these
French
things. I mean,
assignats, they juice the market, they get it so excited, and then it kind of the juice fall, the liquidity falls away, and everyone goes, "Oh, do it again, right? We need more." And yeah, it's like a drug. It wears off, and you're addicted to it. And so we could be having one of those kind of withdrawal periods where no one's paying attention, but you're like, looking at it, going, "Whoa!" On second derivative, all these things is slightly tighter, and maybe we're actually going to get a pause here, a sell off, and before we get the next leg up. I'll just say a couple of things. I mean, I'm totally open to that. Could be the path forward. One, the deficits, you're saying, look, it went from 6 to 4. It's still a deficit, right? And we're not trying to really rein it in.
We're never going to balance it.
Yeah,
but it's rate of change. I mean, the second derivative is negative.
Yes, exactly. Rate of change is negative. I would say also the Fed is still quite loose. I know we're kind of like, oh, they're like, are we going to get more rate cuts? Are we not? It's still kind of ridiculous. We still have almost 3% inflation. The Fed used to be trying, if the target was still 2, they should be still super tight. They should have not have cut rates last year. They should be trying to get the 3 down to 2. They're not. So yes, it's negative. Like, we're maybe backing off some rate cuts that we hoped we were going to get. But I'm like, if you have another picture, you go as you're still way behind your target and you're not even talking about it. And so maybe we're still loose. Earnings are still growing 10% this year. That kind of go. So just one other thing on the kind of money side. The government has been kind of investing in stocks, right? Like MP Materials, Intel. Like, if you got it, maybe the money.
Kind of weird.
Money's come. There is a little bit of a Zimbabwe play going on with the U.S. government directly investing in companies of national priority. So I was just like, maybe there's another angle to this we should keep track of. And then, but more my wife, one thing that kind of two things keep me bullish. One is I feel like institutions, you're much more attuned to that there could be a wobble in a greater picture. Like, this could get insane, but I'm just.
Oh, I know it goes insane.
Yes.
I just remember that in Weimar, there were a couple of shakeouts that were 50% in the stock market, or like in the price of gold in marks. Like, these things have crazy shakeouts along the way.
Yes, but I would just say, on the other hand, most other institutional investors lack your imagination and just think this is 1999 again, and they don't get any of it, and it's all doesn't make sense. And so I look at that bearishness and I go, sheesh, that makes me bullish. The fact that you're still fighting it. And so that's kind of why I'm like, that keeps me bullish. And the final thing, but not to negate any of your points, the final thing is just a stupid thing, but I'm like, I think this stuff can be very hard to time. There can be false signals. And I just want to ride the bigger picture and personally stay long. And if there is going to be a sell-off, I will take the beatings, because I think in the past, just looking at my own self and my own trading, I've messed stuff up, missed stuff, trying to, in the past, I thought there would be those sell-offs. I think the second derivative is doing this, doing that, didn't. Like, oh crap. And then the S&P gets away from me. So personally, I just said, I'm just going to just lock it in here and I'm going to go with it. And it may be stupid and I may be ignoring some things, but meanwhile, earnings are coming in fine at the macro level. GDP is coming in fine. The market's so far mostly trading. So that's why I'm in it. But I just admitting there is a slight error, a slight angle, a bit of stupidity to my thing that I'm just like, I'm just not going to miss this again. So Kuppy may be right, and there could be a big beating coming, but I will take it because I'm trying to stick in it for the bigger thing.